Welcome to Mortgage 101, where you will learn the important steps of buying or refinancing a home. Hello, I am glad you are here. My name is Nathan Ruffey, a mortgage loan originator with over 25 years of lending experience that has your best interests in mind. After listening to this full podcast, connect with me to discuss your home loan needs. Now on with the show. Hello and welcome to another very informative podcast with Mortgage 101. This is Nathan Ruffey, a licensed loan officer. What I want to talk about today is trying to play the market. We have seen rates, especially during this, you can be listening to this podcast 10 years from now. Hopefully you still are. But right now we have a coronavirus going on in the nation and it's driving the markets up and down. So when we have catastrophic events like that, a conflict, which means a war, trade conflict with a foreign nation, that's what's going to move the market. And right now, the market is really moving up and down, sporadically, violently up and violently down, and it's changing those interest rates. And there's so many people that I talk to out there that lock, but then there's that small segment of individuals that say, well, I'm going to wait for it to go down even more. Well, then the next day the rates go up and they missed an opportunity. If you have a rate or payment that you have said, this is what I want to get and I will be happy with and not get that greedy syndrome kicking in, then do it. Because 1/8% going down is not going to change that payment that much, but going up 1/4 to 3/8 up is going to change the payment for the worse. And now you missed an opportunity to possibly save you some money. 1/8% down, it takes a lot for the rates to move down. I mean, where we're at right now, it's taking a lot, and it's been a long 2-3 weeks for this to get where it is today. But overnight, the rates can shoot through the roof. That's how quick the rates move up. It just takes a lot for the rates to move down. So if you are looking to do a refinance and you say, hey, saving $100, $200, $150, $75 is going to benefit me, and when it hits that rate that it's going to benefit that savings, let's do it. Instead of saying, oh my God, and get that syndrome and crazy syndrome and going, oh my God, I want to wait. It might go down I might save another $20. But then again, that $100, poof, it can be gone the next day and now you're only saving $25 if you're saving that at all. So if you have a target goal on a savings or an interest rate, you need to lock it in. Don't try to sit here and play the market. When have you gone to Vegas and say, one more roll of the dice, so one more spin of the wheel, one more hand, and you come out a winner? It just doesn't happen because you go, okay, the next hand, you won that one turn, and then you go, okay, I'm going to do it again. And then you lose it, and then you try to fight and get it back, and you spend more money, and it's not worth it. You got to set a goal for yourself that I'm going to save this much money or I want to hit this rate and lock it. I've locked a lot of people in the high 2% range, mid 2s, low 3%, because that was their target. And they go, okay, I'm done. I'm not going to gamble this anymore. Let's just lock it. And then a couple days later, the rates went up. And they would have waited at themselves out of a refinance or a great purchase loan if they're in the market. So on a refinance, you're already in probably a good payment. You're already probably in a good rate. You're used to making that payment. But if there's a savings that you can do, and everybody says, oh, it's got to be 1%. No, it doesn't have to be 1% lower to make it worth your while to save. It can be 1/4. It can be 1/2. Don't listen to individuals that are not in the market like we are, the mortgage professionals in there every day. It does not hurt for you to have a conversation with the mortgage professional. Say, hey, here's my mortgage statement. What can you do for me? I'm just looking to a rate and term. How much savings can I get on today's current market? It doesn't hurt to have a conversation like that. Most of the loan officers out there are not sitting there and doing a strong arm sell. I'm not that strong arm sales loan officer. I'm way past that. If there's a benefit for you and you want to do something, let's do it. I'm here to facilitate a loan, a need for you, which is to save you money. And if you like the terms that we present to you, let's move forward. But there's got to be a savings that benefits you. And if it doesn't, then there's no reason to move forward. And I've always tell my clients, nobody's making this mortgage payment but you. And you have to feel comfortable making that mortgage payment. Because nobody else is going to make it but you. Not me. I'm going to present you some options that are going to save you money if there's a savings to be had on a refinance. So have a conversation. It does not hurt to explore your refinance options by having a conversation. And I welcome those conversations. If you want to do something, Let's do it. I'm here to help willing and able home buyers and home refinance individuals that want to move forward on a loan. And I want to present you your options based on your income, based on your credit, and the availability of the equity in your property. So let's have those conversations. It doesn't hurt. It doesn't hurt me to have a connection with you. All my contact information is below if you want to connect with me and have a conversation. And if you're going to do a purchase, though that buyer, you buyer, if you're a purchaser, don't sit here, I'm going to wait for the market to crash. I've been doing this since 1988. We had the tech bubbles. We had the crash of the market of the 125s. If you've been around that long, that means we lent more than 125% of the value of the property. The tech bubble, the housing crash of 2005 through 6 and 7 and 8 of 2000. We're going to get it again. That's just the nature of business. That's the nature of the economy. It goes up and it goes down. It goes up and it goes down. When you sit there and try to depict the market, there again, what I said earlier, you're going to lose. I'd much rather have an interest rate at a lower rate than I would on a house value that's going to lose $50,000. Because in 7 years, that house lost 50. Well, it gained 150. So you got your 50 back. Now it went 100%, $100,000 up. The interest rates are the thing I'm concerned about. I'd much rather have a low interest rate because something of value, especially housing, is always going to see a rebound. There's no more land to be built, at least here on the areas that I can lend in. I'm right here in California and Arizona, my two main properties, or two states where I lend in. In California, we can't go further west. It's the ocean. So anybody that's going east towards the desert, you don't work that way. You work out in the Orange County or IE or LA area. So those things are going to drive where you're going to live. It's location, location, location. They always say it. Location of the property. In the Phoenix area where I'm at as well, we're expanding outward. But then you got the traffic issues, you got the freeway issues. Those things are going to drive where people want to live closer inside Phoenix. So you can't go any further out. You got to go up. So I'm much rather have, obviously buying a great location, but I'm much rather have an interest rate that's low. And when you as a buyer is trying to wait for the market to turn, it's just not going to turn. Right now the interest rates are low. And the good savvy realtors are, when they put prices on houses up for sale, they're going to price it and say, heck, the rates were 0.5% higher last week. Well, that house still with this payment, I'm just rounding now, a $400,000 house at a 4% commands this payment. Well, now the interest rate's at 3%. Now I can raise that property value up to $450 because it's going to have the same payment. And I'm just speculating. I got to figure it out. I don't know the exact payment, but they're going to raise that purchase price because that 4% is going to be the same as that 3% on a higher purchase price. Savvy realtors are going to do that, and you're going to see that coming unless we're hitting a crash or downturn in the market. I wouldn't say crash, but a downturn in the market. So the rates right now are extremely good. I don't think they're going to be any higher than, we may not in my lifetime. I don't know. I don't know if we're going to see 6%. I think it's highly unlikely we're going to see interest rates that high. So right now, if you're in the position and you can afford to purchase a home, buy that house in an area where you're buying, then buy it. If you can afford it with the down payment, the credit, and the monthly debt to income ratio, buy it. What are you waiting for? Oh, I want the market to turn. Prices are high. Yeah, but prices 5 years ago weren't there at right now. Prices now, while I'm doing this podcast, are higher than the 04, 05, and 06 market when we had those funky programs where stated income people, that we can state their income, what they want, and investors were buying it. We don't have those programs anymore. Today, we must verify your income, assets, and credit. That's just a given. We're not lending down on a 580 at an 80-20. That's just not there. I don't think those things are ever going to come back. And I've been doing this a long time. And when those programs were here, I'm like, man, this is a disastrous heading we're going on. And it took a little while to get there, but it got there. I started this business when there was no credit scores. We had to really look at that file and base it on the grade model, A+, A-, and so on. And we did that based on what their debt to income ratio was, what their credit, if they had no derogatory credit in the last 12 months, whether they were an A+, if they had a debt ratio below 45 to 43, then they were an A. So we really had to grade that file based on its merits, which was what we had in file. Well, today, you run your credit, boom. If you don't have the credit score, we can't do anything. Then we run it through the desktop underwriting system or the LP system and see what it gives us in return on an approval or a loan decision or not approval. But we got to back everything up, obviously, with paper, your pay stubs, W-2s, bank statements, run your credit. But if you're in the position to purchase, do not wait and try to predict the market. Like I said, it does not hurt for the home purchase buyer to have a conversation with the loan officer to say, this is where I want to go. Not everybody deserves to buy a house with a 550 credit score. We go down to a 500, but you're not going to like the terms at a 520 credit score. You've got much more things going on in that credit that's going not to allow you to purchase a property. I talked to a lot of buyers, a lot of home refinance. Well, so-and-so does this, so-and-so does that. I know that they did this. Well, everybody's circumstances are different than yours. And your circumstances are different than theirs. They might not tell you all the underlying avenues on how they got there. That's where a licensed mortgage professional comes into play and advises you what you can do based on your credit, your income, and the ability for the down payment when it comes to a purchase or the availability equity on a home refinance. So the point of my podcast is, if you're looking to refinance your property, don't wait. If there's a target payment you want to do, then just lock it in and say, dang, I met my goal and where I wanted to be. Don't let that excitement get you going, oh my God, I'm going to wait another 1/8%. That 1/8% is only going to bear you maybe $20 to $33 more savings, depending on what your loan amount is and in your situation. But then that rate may go up another 1/8 or 1/4 or 3/8%. Now you're just lost. You want to save 150, now you're down to 100. Let's just say example. Now you're down to 100. The excitement deflated, it's done. That's when you should have locked it. I met my goal. I wanted to be there. Boom, done, lock. On a home buyer, if you're looking to purchase a property and you say, this is where I want to spend on a payment. I want to spend $1,500, $2,000, $1,800, $2,500 on a house payment with everything included. What can I buy with $2,500 a month house payment, and this is what I have the availability to put down as a down payment? That's where the mortgage professional comes into play and says, okay, based on what your scenario is, this is what you can buy. And if you need to stay in a certain area, typically people they live within 12 miles of where they're immediately living right now, a 12-mile radius, typically. Because that's where kids go to school, it's their job location, it's where they really entrench themselves into the community with church, schools, grocery stores, barbers, doctors, everything like that is within that 12-mile radius. Typically, that's on average. So can I buy a piece of property within a 12-mile radius where I am now based on what my budget monthly payment's going to be? You got to ask yourself that. And it may not be the property you want, but it's a property, it's a roof over your head. And guess what? That property is only going to do nothing but gain value. Okay, that's all the thing's going to do. Especially with where we're at right now in the market, as I'm doing this podcast, prices are high. I mean, everybody, low inventory, prices are high, especially where the market I'm lending at right now. It may be different in different markets in the state of Texas or Georgia or Florida. It may be different out there. But the two markets I serve, California and Arizona, where I'm licensed to do business at, especially in Arizona area, there's just still building because there's so much land. California, we're landlocked. There's only so much land we can develop, and that land is very, very costly to develop and to build. That's why the prices are so high, but we don't have much land to do that for new home purchases. So if you need to move out of the area to own a home, if you need to, I wouldn't say settle, but invest into a property at this immediate time, because that property is going to be a heck of a lot better than what you're probably renting right now. But if you own that property and you're there for a couple of years and then some situation changes, like the market changes, your job changes, your dynamics of your family changes, whether a child moves out or a child comes in your household, those dynamics are going to change. Then you got to look at what the market is currently and then go buy something different. But that property is not going to lose value that much. But you can rent the property or you can sell the property. Things will change with that property, but it's about location. If you bought it for X, give it time because it's going to be worth more than the X you bought it for. Bottom line, that's what California market does. So the podcast is today, when should I lock an interest rate? And a realtor is going to tell you, It's always a good time to buy and sell real estate. And it truly is. That's not a sales pitch. That's just their motto. It absolutely is. Home values are going to go up and go down. That's just the market. But guess what? When I first moved to California to Rialto, I think my parents bought a house for $22,000 back in, I don't know, 70s. The house is worth, I don't know, $350,000 through $400,000. I mean, it's not going to lose value like that. The house probably will never, ever, unless something catastrophic happens, that home will never be worth $22,000 again. So value just continues to go up because of inflation and all the other aspects of the economy. So real estate is a safe haven for your money, is a safe haven investment. Yes, it's going to lose some value, but it's going to gain over time more value. That's just the fact of, if you look at historical data, it just continues to go up. Interest rates fluctuate. I got in this business when the interest rates were at 12%, and I just got in when the refinance boomed because people were at 16%. Now, given the homes weren't $200,000, $300,000, $400,000 back then, I mean, they were, it was set 50 to 150 on average, and it has since went up from there. So these interest rates where they're at now, and should stay here for a while, but I can't predict the market, but they should be with us for a while. Explore your options on locking into an interest rate. Just do it. And I love to connect with you and have those conversations and explore your options. All my contact information is below. Thank you very much for taking the time out and listen to Nathan Ruffty with Mortgage 101 podcast. Have a great day, and I look forward to connecting with you.
Thank you again for taking the time to listen to this very informative podcast. Remember to subscribe, share, like, and comment. There is no better time than today to explore your options to purchase or refinance a home. Please call, text, or email me at the information below to get started right away, and I look forward in hearing from you.